Ever toss and turn at night worrying about your investments? Let's face it, trusting a platform with your hard-earned cash can feel like a leap of faith. So, if you've been wondering, is my money safe with Wealthsimple, you're definitely not alone. Today, we're diving deep into Wealthsimple's security measures, exploring how they protect your cash and investments. We'll break down the nitty-gritty of insurance, regulations, and those all-important safety protocols. Now, Wealthsimple isn't your traditional bank. They function more as an investment platform, offering a variety of accounts, including trading stocks, crypto, and even holding a simple cash balance. But with this variety comes a question: are all your funds protected equally? Let's unpack this layer by layer. Cash in the mattress, well, sort of. For your cash holdings in Wealthsimple Cash or Save, there's good news. Wealthsimple doesn't hold onto this money itself. Instead, it acts as a middleman, keeping your cash in accounts with what are called CDIC member institutions. What's a CDIC member institution, you ask? Think of it as a safety net. CDIC stands for Canada Deposit Insurance Corporation, a government agency that protects your deposits up to a certain amount in case the bank holding your cash goes belly up. That's right, even if the bank folds, your money is insured. How much is protected? Here in Canada, the CDIC offers coverage up to a whopping $100,000 per category, per eligible member institution. Now, Wealthsimple cleverly partners with multiple CDIC member banks. This means you can potentially leverage coverage up to a combined total of $500,000, a nice financial safety cushion. Investing for the future, but is it safe? Alright, cash is covered, but what about your investments? Here, things get a little more nuanced. Wealthsimple acts as a custodian for your stocks, ETFs, and crypto holdings. This means they hold onto these assets on your behalf. The good news? These investment accounts are also protected, but by a different entity, the Canadian Investor Protection Fund, or CIPF. Similar to CDIC, CIPF safeguards your investments in case Wealthsimple Investments Incorporated, Wealthsimple's custodial arm, runs into financial trouble. Hold on, there are limits. CIPF coverage isn't unlimited. It protects your cash held in margin accounts and the settled value of your securities to a maximum of $1 million. That's a significant chunk of change, but it's important to be aware of the limitations. Beyond insurance, security measures matter. While insurance provides a financial backstop, robust security practices are equally important. Wealthsimple takes security seriously, employing two-factor authentication to make unauthorized access difficult. They also use industry-standard encryption to keep your data safe. However, remember, security is a two-way street. Here are some tips to keep your Wealthsimple account extra secure. Use strong, unique passwords and enable two-factor authentication. Beware of phishing scams. Wealthsimple will never ask for your password via email or text. Stay vigilant and report any suspicious activity to Wealthsimple immediately. So, is your money safe with Wealthsimple? Based on the layers of security in place, from CDIC and CIPF insurance to robust security protocols, Wealthsimple offers a solid foundation for safeguarding your funds. But remember, no platform is foolproof. It's always wise to diversify your investments and stay informed about potential risks. Ultimately, the decision of whether to invest with Wealthsimple comes down to your own risk tolerance and financial goals. With that said, thanks for watching, and until next time.